Good afternoon and good morning for those of you on the West Coast. My name is Stephen Forrest. I'm a partner in the litigation group at McGuire Woods, and I'm pleased to host today's webinar on navigating insurance recovery issues for COVID-19 losses. A little bit of housekeeping. You'll notice that there's a chat box on your screen. Feel free to scratch out any questions that you folks might have for us. I don't know if we're going to have an opportunity for a Q&A session at the end of this, but hopefully we'll be able to address questions on the fly as they come in, and if we don't, of course, we're available to answer your questions and carry on the discussion offline. So before I introduce my fellow panelists today, I wanted to set the stage for what we're going to be discussing here today. We can turn to the next slide, please. I'm sure I don't need to tell any of you about the enormous impact that COVID-19 has had on the U.S. and the global economy. I think it's fair to say that businesses in every industry have been affected, but particularly hard hit have been businesses that essentially been ordered closed by state and local governments, which includes restaurants, hotels, retail stores, other businesses that depend on people gathering at their premises. These businesses have incurred tremendous losses, and not surprisingly, the businesses are looking to their insurers for possible relief. Today's webinar is going to focus on only one type of insurance, business interruption insurance. There are, of course, lots of other types of insurance that might respond in particular circumstances, whether there's a liability claim made against an insured, a securities claim that might trigger D&O coverage. Some policyholders have event cancellation policies that could be implicated depending on the circumstances. But in the interest of time today, we're going to stick to business interruption insurance claims only. So if we flip to the next slide, kind of setting the stage for what we're going to talk about today, my colleagues and I are going to walk you through the basics of business interruption coverage. We're also going to talk about issues involved in making claims for lost income under a policy that covers business interruption. And then we're going to wrap up by providing some recommendations on what policyholders should be doing in order to protect and assert their rights to insurance coverage. Next slide, please. So here's our panel today, and again, I'm Stephen Forrest. Joining me today will be Matt Fender, who's a partner in our Richmond office, and also Ann Dorsett, who's a counsel in McGuire Woods' Charlotte office. All of us have extensive experience representing policyholders in insurance recovery matters, including business interruption claims. So with that introduction, I'm going to turn the mic over now to Matt, who's going to provide some basics on business interruption insurance.
Thanks very much, Steve. So we want to talk a little bit. I think there's a lot of folks who maybe have heard the term business interruption insurance, but don't know a lot about how it works or where it comes from. Business interruption, or BI cover, is typically included with commercial property policies. It provides the policyholder with coverage for business income and usually extra expense where there's been damage to business property that's covered under the policy, of course. The sort of quintessential situation, if you thought of a classic BI situation, is, the business premises burns down. It's just damaged or destroyed by fire, and so the policy responds and provides lost income that you incur during a certain period of time or up to a certain limit while it's being rebuilt. Most policies have an extra expense coverage extension And that's going to pay for something like renting another premises while yours is being rebuilt, or hiring security guards to safeguard the property while it's in its damaged state, or things along those lines. The coverage trigger for business interruption cover is usually something along the lines of direct physical damage to insured property. Here on the screen, I'm going to give you a few examples of this. This is an example of the coverage language from a policy. And you see it says the suspension must be caused by a direct physical loss of or damage to property. Here's another one. This policy ensures business interruption loss as provided in the business interruption coverage as a direct result of physical loss or damage of the type insured to the property. And then here's one more where it says it has to be caused by loss, damage, or destruction by any of the perils covered herein during the term of this policy to real and personal property as covered herein. So that's sort of what we're talking about. And a note that the direct BI cover itself is probably not tremendously helpful to the typical business that's been shut down by a government order. If the property itself is contaminated, say, you could come up with some evidence that there was, COVID-19, particles and, on the surfaces in the building, or even if someone, who had been in the building had tested positive, then you could probably make a pretty good argument for cover under some policies that, for the time you had to shut down to clean it or something like that. But that probably doesn't help us once it's clean and it's still shut down by order of the civil authority. So in order to address that, we're going to talk about the civil authority coverage trigger in just a minute. But before I do that, I just wanted to comment briefly on this question of physical damage. Carriers are sort of going to be taking hard positions that physical damage means structural damage, a fire, or got knocked down, or something like that. But there's certainly some case law out there, and there have been some New Jersey cases and one Third Circuit case that have been very prominently publicized, floating around the internet, suggesting that contamination is sufficient to be physical damage. One of those cases involves a bad odor, one involved an ammonia release, one suggested that the presence of airborne asbestos in the air, those kind of things were sufficient to trigger coverage, that it didn't have to be the building fell down. So this is still very much evolving, and it's something that's going to no doubt be litigated. So moving to where we really think the battleground here is, most property policies that have BI cover, the overwhelming majority of them, also have a civil authority coverage extension. And the coverage triggers vary, but essentially what this says is if you lose access to your premises because of an order of the government, and sometimes it'll say civil or military authority or something like that, then you can get business income cover for the time you don't have access. There is usually, not usually, there's often, and maybe more often than not, a requirement that you be able to prove physical damage, going back to what we just talked about a minute ago, to other property, to property other than that which is insured under your policy. Sometimes it has to be within a certain distance. We've seen a policy that said it had to be adjacent. Some say it has to be within 1 mile or 5 miles. Some don't provide a particular distance. They just say it has to be other property somewhere that caused the government to issue this order. And then there's some policies that don't sort of say that at all. They just say it has to be, the order has to have been issued because of a covered peril or something like that. So I wanted to look at a couple of four examples of that just to show you what this looks like. And these are all from actual policies that we've looked at. So here's one, and it says that when a covered cause of loss causes damage to property other than the property at the described premises, we will pay for the actual loss of business income you sustain and necessary extra expense caused by an order of the civil authority that prohibits access to the described premises. And then here's the sort of key language: due to direct physical loss or damage to property within 1 mile of that described premises. So that's what that looks like. Here's another one that's very similar, that deals with where the order is the direct result of physical damage of the type insured at a location within 5 miles of the insured property. Now here's one of the type that doesn't require that showing, and it deals with where you have a civil order that's issued. It's going to cover your actual loss sustained when you lose access to real or personal property because of the order of a civil or military authority, irrespective of whether the property of the insured has been damaged. And it doesn't say anything about whether other property has to be damaged, but it does have this sort of language that there has to be a result of an insured peril. And so the carriers may try to argue that that still means that some property somewhere has to be damaged, but that's not expressly in the policy. And then finally, there's this example. This policy is extended to cover the loss sustained during the period of time not to exceed 30 days when access to real or personal property is impaired by order or action of civil or military authority in connection with or following a peril insured against. So this is similar to the last example, and then it mentions that it has to result from an insured peril, but it does not have the requirement that you expressly that you show physical damage to other property. So this distinction between those that require the showing and those that don't may very well end up being important in how this coverage shakes out. Ultimately, that is going to incorporate that physical damage to other property requirement that we were talking about a few minutes ago, and the law is, still somewhat unsettled in that regard. There are some cases out there, and there's one that I'll mention just briefly called Assurance Company of America against BB Service Company. That's at 265 GA 35. And that was a hurricane case where the court ultimately found coverage where the insured had put in evidence based on news reports and the findings that the government made in issuing the shutdown order. And so we may very well be looking at some things like that in order to establish coverage in this case. So with that, I'm going to hand it over to Anne, who's going to pick up.
Thanks very much. Another extension of coverage that we've been seeing and we think is applicable to the COVID-19 situation is the extension for communicable diseases. This is found in certain policies, particularly policies that are issued to entities that house people or that have a high volume of the general public in their space, such as universities, boarding schools, senior living facilities, athletic clubs, and retail centers. There are limitations to this coverage, and so if you have communicable disease coverage, you need to look at your language carefully. Some require an outbreak at the facility itself. Some are limited to repairs and mitigation efforts only. Some include BI and extra expense, but those are limited to the period of restoration. Next slide, please. So this is the highlighted language is the language that I was talking about. It requires the actual, not suspected presence of communicable disease. Other communicable disease extensions also limit or exclude testing efforts beyond a certain number of days. So you would be able to recover for testing up to a certain period after the initial outbreak. These provisions also have very tight notice requirements, requiring notice within 30 days, and most are subject to a sublimit. So it's important to review the policy and understand the interplay of this extension with other provisions. Next slide, please. Now, once you've reached the hurdle of scaling the wall and showing that there is business income or an extra expense that is covered by the policy, the burden shifts to the insurer to prove exclusions. We're going to talk about two exclusions that we believe insurers will raise. The first is the virus exclusion, and then the second is the pollution exclusion. Next slide, please. So this is an example of the virus exclusion, and this is found typically in policies that are issued by American insurers. And as you'll see, it's fairly explicit. It will not pay for loss or damage caused by or resulting from any virus, bacterium, or other microorganism. That's a fairly straightforward exclusion, and let's go to the next one. And this too has the same, it's a little broader and actually worse than the prior because the prior exclusion required causation, this exclusion does not. So if you have a virus exclusion, you face an extremely difficult hurdle in obtaining coverage for business income and extra expense. Interestingly, however, we have seen insurers inserting the virus exclusion into policies on renewal. And so if you don't currently have a virus exclusion, I think that raises an argument that the insurers understood that these were covered losses and damage and wanted to make it and wanted to address it by inserting a virus exclusion in the renewal policies. Next slide, please. So this is the pollution exclusion. Insurers will likely at least identify this exclusion as a basis for not providing coverage. They are going to rely on the word contaminant and claim that the coronavirus is a contaminant and therefore excluded by the pollution exclusion. Arguments against that position are, if that's the case, then why would you ever need a virus exclusion? In addition, the treatment of this issue varies on a state-by-state basis. There have been many states that restrict the application of the pollution exclusion to industrial types of pollution. So you need to understand your policy terms, where the pollution exclusion applies if you have one, and you also need to understand your state's law's position on the application of the pollution exclusion. Next slide, please. Another extension of coverage that you may have is contingent business interruption. And these are claims that arise when due to a disruption of a key customer or supplier as a result of the presence of the virus. If a key supplier is forced to close, for example, the cost that you incur to get product from another source would be considered extra expense, and the lost profits that you incur because you can't manufacture your product would be the business income losses. Next slide, please. And so this is an example of a contingent business interruption extension. And you can see what's interesting here is not only is it a disruption to your direct suppliers and direct customers, but it's also a disruption to any direct or indirect suppliers of those direct suppliers and direct customers. Next slide, please. So Matt already discussed the civil or military authority, but there are other extensions to look for in your policy. One would be the ingress-egress extension, and that's when you are prevented from entering your building, or your customers are prevented from entering your building, or your suppliers. That's the ingress-egress example. Law or ordinance is another one, and that is where a law is issued that impacts your business. So look for those as other extensions of coverage. I will note that those are all typically subject to a sublimit or a time period. Next slide, please. So you're going to hear our recommendations later, but if you have not done so already, I recommend that you create accounting codes to track expenses and to document and to track losses. You need to document your losses, and you need to document why steps were taken that created losses. Next slide, please. This is an example of how the quantum of recovery is explained, and I used air quotes for that. You can see it is a very complicated process. So be sure that you understand the provisions, and they vary across. This is not necessarily the typical way that your policy will define the quantum of recovery. You need to look at your policy. Calculation of loss is one area that it may be stated in. Again, these are all very different products, but you need to look at how that is calculated and make your accounting and other decisions in accordance with those provisions. Next slide, please. So because it is so complicated, whenever you're presenting a property loss, it is good to retain a good forensic accountant. But in particular, in this for this particular loss, we highly recommend it. Again, you need to look at your policy provisions on the calculation of loss, work with a forensic accountant to set up the accounting codes to identify the losses. In addition, some policies have what's called a claims adjustment or loss adjustment extension, and so if there is coverage, those costs, i.e. the cost for a forensic accountant, would be covered. But those are also subject to sublimits, and again, you have to show that the loss itself is covered before you are able to recoup any of the loss adjustment expenses. With respect to the appraisal provision, this is not something that I would trigger unless you know and understand what is covered under your policy. You don't want coverage to be determined in an appraisal process. You want coverage to be determined either mutually between you and the insurer or by a court. Now I'll turn it back over to Steve.
All right, Ann, thank you. So if we can distill the points that Matt and Ann addressed, I think there's three principal questions that we have repeatedly seen in evaluating business interruption claims. And the first is this threshold question of whether the virus constitutes, quote, physical damage to property. Undoubtedly, that will be a heavily litigated, heavily disputed phrase, and one that I expect will tie up insurers and insureds in litigation for years to come. Second is the extent to which the scope of damages are covered by the civil authority cover that Ann had talked about, and Matt as well. And lastly, it's an important issue. If your policies have a virus exclusion or a pollution exclusion, we could certainly expect to see battles between insureds and insurers over the extent of that coverage, whether it applies, and if so, what are the limitations on coverage that otherwise would be available. Next slide, please. So to that point about the threshold issue of physical damage to property, I wanted to show you a real-world example. This is a reservation of rights letter that one of our clients received from an insurer after recently submitting a claim under business interruption extension. And you could see quite clearly the position the insurer is taking here. They are going to look for deformation, permanent change in physical appearance, or other manifestation of a physical effect. Your notice of claim indicates that your claim involves coronavirus. However, the fact of the pandemic, without more, is not direct physical loss or damage to property at the premises. I think that's going to be the reaction you will see from most, if not all, insurers when they're faced with business interruption claims. Let's face facts. This is a massive exposure for the insurance industry. The ultimate damages that are going to be presented will be, in my view, astronomical. We've seen large-scale claims made under business interruption policies for events like hurricanes or earthquakes or fires. This is a far broader pandemic that's impacting businesses across every industry and with no bounds in terms of geography. In a sense, this is an existential threat to the insurance industry, and we fully expect that they will push back hard on claims for coverage, and that this is going to entail a long and drawn-out fight in order to establish any rights to coverage. So let's move on to the next slide. What I had just said on fighting, the difficult issues only underscores the importance of getting the easy stuff right. And one of that is just providing notice. Getting prompt notice to insurer on business interruption loss or claim is paramount. There are going to be difficult fights for sure. You don't want to give the insurers another basis for disclaiming coverage namely that you didn't provide adequate notice. This issue of providing evidence of a loss on a timely basis, Ann talked about this. You need to know what your policy says. Many policies will have specific deadlines that require submission of a proof of loss within a certain period of time, 90 days, 180 days. Know what your policy says and either comply with that or make sure that you're negotiating a extension of time so that you don't run afoul of that provision as well. Next slide, please. So just a couple of fact-specific items that I think you folks should keep in mind as you evaluate the potential for business interruption claims. First, it's this notion of a voluntary business closure. It's going to make your argument very difficult. It's one thing to point to a governmental order, state or local order that mandates the closure of your business. If you do it voluntarily, that's going to create another hurdle that you'll have to overcome to establish the right to coverage. Something else to bear in mind is unfortunately, in this state of unrest, consumers are simply not buying as much, shopping as much as they did in the past, and merely observing a downfall in your business and loss of business as a result of fewer customers is not going to be sufficient. We're going to need to find more in order to tie these claims for lost income to a covered occurrence. And as Matt had mentioned before, there are some, I think what I would call low-hanging fruit. This notion that your facility is contaminated and you've got to shut the facility down and undertake expenses to remediate the site, I think makes for, probably the easiest, among the easiest cases that we're going to see for business interruption claim recovery. Next slide, please. So I know we're running short on time. I'm just going to kind of quickly cover a few things. First, the state of litigation for COVID-19 insurance recovery. There have been some lawsuits that have been filed to date. Some of you folks may have read in the press, a couple of high-profile restaurants have filed claims against their insurers for lost income resulting from a shutdown of their facilities due to government orders. There was a lawsuit in New Orleans. French Laundry in Napa Valley has a lawsuit against its insurer. Some restaurants and theaters in Chicago have pooled together and filed a lawsuit for business interruption claims there as well. There have also been a couple of Indian tribes that have filed cases claiming damage to their property and alleging that the properties can no longer be employed for their intended use. The one thing I can tell you is that this litigation will be drawn out. There are no easy, quick solutions here. There will be a lot of hotly contested issues in this litigation. Again, sort of using prior examples, Hurricane Sandy took place in 2012. There are still cases kicking around the court system 8 years later, 7.5 years later, relating to those claims. We fully expect that insureds will need to hunker down in this litigation, be prepared to fight the insurers over the long haul. Next slide, please. Quickly, as some of you may be aware, there have been some legislative efforts to address income loss, business interruption issues in the context of COVID-19. In New Jersey, Massachusetts, and Ohio, there have been bills that have been presented that would effectively require insurers to cover COVID-19 claims, notwithstanding policy language that might otherwise bar coverage. None of those bills have gotten to the point where they've become the law, And as you can imagine, there's serious resistance to those bills from the insurance industry. Even if there is some relief on the legislative front, all of these bills are really targeting smaller businesses. Some of them cover businesses with 150 or fewer employees, or 100 employees or fewer. So it's not going to provide any relief for large businesses, but there may be some hope on the horizon through legislative efforts for smaller business as well. You see there's a note here that some members of Congress have already written to insurance trade groups urging them to provide financial cover to companies that are impacted by COVID-19. I think you can expect state insurance regulators to get involved quickly in this area as well. The Department of Financial Services, which maintains insurance issues for the state of New York, has already sent out a letter to property and casualty insurers in the state of New York requesting clarity from them on the scope of coverage available under their policies. So if we move on to the next slide and see if we can wrap this up. Based on what we've talked about today during this presentation, there are a number of recommendations that we think apply to policyholders out there that are considering business interruption claims. First, and fairly obviously, you need to do a complete review of your insurance policies to make sure you fully understand what coverage you have and what coverage you don't have. And if you don't have a sophisticated in-house risk management program, consult with outside experts. There are people who have familiarity with these claims, have litigated these claims in the past, that can help you understand the scope of insurance. The next point, which Anne is already identified for you, you need to track your losses. Ultimately, this is going to become an accounting exercise, and whether you have the capabilities in-house to do it yourself or you need to employ an outside forensic accountant, it's vitally important that you keep track of all the losses that you would then be submitting under a business interruption claim. And you want to take over from here?
Sure, I'm going to combine the next two in light of our time. It is vital that you sit down with your agent or broker and go through your policy and understand all of the duties and requirements. If you have shuttered your business, you need to document how you are protecting it and maintaining that property in order to protect your rights for coverage in the event that something else happens beyond the business income loss. You need to also understand how decisions impact coverage and document the necessity of such decisions. For example, if you're a property owner and you agree to rent reductions, for AR, if you agree to extend out credit, if you're switching employees from one task to another, you need to make sure that that switch, for example, waiters are now delivering food. You need to make sure that that activity is covered under your policies, including your auto policy. There's also a slight silver lining. If you have a reduced payroll or reduced revenue, you can seek a reduction in your premiums. In particular, workers' compensation is based on payroll, so you may be able to get a reduction in your workers' comp premium. In addition, premium payments, work with your agent to see if you can get an extension on the premium payments, or if you can change the payment plan so that you're paying less now with the goal to pay more once we're through this current environment. Matt, over to you.
Yeah, so just very quickly to wrap up, Steve mentioned this earlier, but it's absolutely essential, even if you have a virus exclusion in your policy. If your business has been closed or significantly impaired by this COVID-19 situation, particularly if you've been ordered closed by the government, then give notice under your policy. It has notice provisions. This is an easy and cheap thing to do that could preserve your rights, particularly even if you have the exclusion, there could be some kind of legislative change or governmental action. Absolutely give notice. And then finally, after you give the notice, you're going to get a letter back from the carrier, and they might flat out deny it, but often what they'll do instead is say, well, we need more information, and they'll ask for information. And you do have a duty to cooperate under the policy, so be sure to respond in a timely fashion to the carrier's letters. answer their questions, give information, although be strategic in doing that in order to preserve your rights. And so with that, I don't think we have time to answer any questions as we're over time, but we will collect the questions that have been submitted and get back to the folks who submitted them. Also, please don't hesitate to reach out to any or all of us. We will be delighted to talk with you about your coverage situation.